Start with importance of stop loss, and then at the end I can explain on different trading platforms.
All right, we can do that. Now, whenever we are trading, we are always trading on a game of probability. Trading is nothing but how probable you are of achieving your targets. Now, there is an entry price in which you will enter. That is your buying price of your script or the share. Next would be your target price. That is how generally all traders, novice traders trade. They will trade on an entry price and a target price. A proper professional trader, a proper professional investor will never look at the target price at all. He will look at an entry price. He will look at what is the amount he is willing to lose if the price dips. Then he will look at what is the target price. Now, what is the loss that he is willing to bear would be his risk. That is the risk he is taking. If I'm entering a share at about, let's say, $100 a piece or $100 one share, I'm willing to take a stop or I'm willing to take a loss of 10% of my entry value. That means I'm willing to allow this price to come down to $90 before I square my trade. When I square my trade in a loss, when the stop loss is hit, I am basically securing my capital. I am not allowing my capital to fall further. Now that is the importance of a stop loss. A stop loss is basically going to secure that your capital does not deteriorate very fast. Now this specifically becomes important if you look at the trading which has been happening in the last 2 or 3 days alone. It's been very, very volatile and large dips have taken place. Large dips. Now, if your stop loss is already in system, it will get triggered and your losses will be minimized, right? So I would take a 10% cut as my stop loss, provided I'm going to get a 30% expected profit. So that means my reward is going to be 30%, my stop loss is 10%. So my risk reward ratio is 1:3. 10% risk, 30% profit, 1:3. Now, good traders always work on small stop losses. They work on small stop losses, but they work on larger rewards. So that even if I tend to lose money on 6 out of the 10 trades, even if I lose 6 out of the 10 trades, that means I am at a 60% loss hit basis. My 4 trades will more than cover up and give me a good profit. Now, a normal trader would like to work on a 2% or a 3% stop loss, right? So if I work on 6 trades of 3% or 5% stop losses, so 6 trades of 5% stop losses is approximately going to be about $30. If it is a $100 portfolio, I am losing $30. $5 per trade stop loss. For 6 stop losses, I'm losing $30. But the 4 trades that I do, each trade, if it returns to me in the ratio, if I'm losing $5, I'm willing to gain $15. So if the 4 trades that I do, which give me $15 per trade, I get a $60 profit. So on a $30 stop loss, I have still earned $60 profit. So my net income would be $120. Are you with me on this so far?
Yes.
So that is the importance of what a stop loss is all about. It basically helps you to bring in discipline in your form of trading. You learn to trade in a disciplined manner. Why is that? Because now it's a matter of having your psychology being created that I'm trading, I'm willing to take a loss. You cannot always be in a system where you say, I will never lose money. 99% of the traders who enter the market who are not trained enter the market to only lose their money in the long run. That is why Kamal, Tahir, me, Yash, everybody else will talk about killing yourself up. It's a business for you. It is not a hobby, it's a business. Now, if you are doing a business and if you are not trained, you would tend to lose money. Now, stop loss is one way of securing your capital. If you lose 6 consecutive trades, you will realize there is something wrong in the way you are taking a trade. So you will possibly look at it from an outsider's view as to what is wrong in you when you're taking a trade. And that is where stop losses play an important role. Any questions here? Guys, any questions? I'll explain to you what the stop losses are. How will you place the stop loss is important. Now, keep one thing in mind. Whenever Kamal or Tahir or me are discussing shares on technical account, giving technical reasons, the same charts are being seen by a professional trader also. The same chart is being seen by big traders also. So they also know that normal novice traders will be putting up their stop losses at a particular level. Now, how does a big trader or a professional trader earn his money? He earns his money by making certain that your stop loss gets hit. So when you are placing a stop loss, you have to play it slightly more smarter. You always go $1 or a percentage or a small fraction lower than where most of the traders would have kept a stop loss. Now, somebody who has taught me, whom I call Guru, he has taught me, and we always work on a system that wherever we see a very strong support, we place our stop losses approximately 1% below that value. I go 1% below. I'm willing to take a chance because I have a conviction that my trade will go well, right? There are some people, what they do is, if they see a very strong support at a particular lower levels, they will go about 55 cents. It is not 50 cents or 20 cents. They will go 55 cents. They will go 75 cents lower. Because the wick of the candle can go low and take the odd stop losses like us also out. So you have to be ready for that. That is a possibility depending upon who is the strong player or trader in the market. So you have to be ready for that, which is why placement of stop losses is always enhanced. That skill of placing a stop loss is always enhanced as time goes by. It is not that I will start trading today, I will learn technical analysis, and day one, if I start placing a stop loss, it will not get hit, even if I'm putting it 1% low. There are a lot of times when suddenly there is a very long wick, lower long wick, which is hitting your stop losses and stopping you out of a trade. So you have to take that with the pinch of salt and enjoy the benefit. But your art of putting a stop loss will keep getting enhanced as the day goes by. Clear?
Mr. Bhatia, one question actually. When stocks go down, there are like two strategies. One is obviously stop loss to restrict your capital minimization in terms of going down. And another is buying more stocks to bring down your average cost. So in what situations do you recommend using like buying more at lower prices to bring your average down? And in what situation do you recommend putting a stop loss?
It's like this. I'll give an example of a wrong trade which I have taken so far. I consider a wrong trade I've taken so far, and unfortunately I did not know how to put a stop loss, so I am now playing on it. I'm talking about Barrick. Now Barrick is a trade. I am not able to trade on Wealthsimple very clearly. I'm not able to put my stop losses over there. Now Barrick started falling. There were times I did think of exiting Barrick and shifting to a different stock. But somehow I had always had a notion, I had a gut feel that the probability of it bouncing back was always very strong, which is what Kamal and me always keep discussing, that is one feather in my cap or whatever you call it, which indicates to me where I have learned that way. Just around the results this time, I did try to average again, thinking it will move up. I averaged it to the extent that even if it gives me a bump up of bringing it to about 31, 32, I would be in a profit and I would exit what is my principal amount secured. But it again took a dip. That is one way where I have failed. Now I have well analyzed in myself as to why I have failed. Possibly I failed because I did not see the weekly and the monthly chart of Barrick. I was only watching a day chart. So whenever I'm trading, I'm doing a swing trade, I would normally not look at only day chart. I would look at a weekly chart also, which helps me to understand why I should not be in that trade. Right? Now, an analogy to explain to you, Prem, why should I use averaging and why should I not use averaging at all? If you are in business and you are managing a loss-making unit, what do you normally do? Do you pump in more money, or would you try and exit that activity to curtail your losses?
You're right. I think if it still has potential,
Yes,
you can do that.
if it has potential and you have a strong gut feeling that your analysis was not wrong, only then would I go about pumping in more money. Now, in Barrick's case, Barrick is what? A gold company. Realize that the world markets are currently in a bubble phase. Your VIX, your PE ratios are very, very high. You're significantly in a overbought position. So there could be a global correction which could happen anytime, which you just saw in the last 2 days. And it could be for any whimsical reasons also. So if a global correction happens and the stocks start falling, where will the big players move the money to? They will move it into safe havens like either pharma companies in stocks, or they will move to precious metals like gold. Now, if gold gets further investment, it will spike up. Now, with that knowledge and with that presumption, I have gone ahead and averaged my position in Barrick. I have averaged my position to almost tripled my position in Barrick. And minute I see a spike, I'm going to move out of it. At least I will recover my principal amount back completely. Right? So because I'm expecting a spike, I'm expecting a global correction any day now. Now all that we will analyze when we analyze Nasdaq, we will analyze TSX, we analyze FTSE, CAC. In India, we will analyze NSE also. I would do that analysis, and then if I realize that we are in a situation of correction, I will move into gold. That is when Barrick will move up. But that is my judgmental feeling, my gut feeling, my confidence in my analysis that it will move up. Number one. Number two, it is also how strong am I? Can I bear that loss or not? That is also a part and parcel of why my stop losses are important. If I cannot bear a loss, let's say my entire portfolio was only on Barrick, that means I would be what, about 40% loss today? Can I afford it? Single script, 40% loss. Can I afford it? Somebody could not. Because as Tahir has explained to you earlier, if there is a 40% loss to be recovered, you will have to actually make profit of about 70% and above to recover your 40% loss. Can you do that? Is it possible? It becomes all the more difficult. So that is why a stop loss is important. Did that answer you, Prem?
Yeah, I think my takeaway is, as an example, if I'm investing in a stock where I believe there is a long-term value, and let's say I plan to keep that for long-term for multiple months or years, then probably averaging it out is better because I know the reason why it's gonna go back. But if it's purely technical trading based on, like, let's say the price is on the lower Bollinger Band and I expect low movement, then probably stop loss makes more sense.
Exactly.
Got it. Thank you.
See, like we always tell you, when you're playing on technicals, depending upon the chart you're watching, is it a 1-minute chart? Is it a 1-day chart? Is it a 1-hour chart? Your target should also be achieved in a similar time frames. If I'm playing on a 1-minute chart or I'm playing on a 10-minute chart, I don't expect my target to be achieved in about 2 or 3 weeks or 4 weeks time. I'm playing accordingly. I will expect my target to be achieved in a day or two. If my target ratio is 1:5 or 1:6, if I'm using a 10% profit margin, I'm expecting to earn 10% margin, and I'm watching my chart on a 1 day, I expect that 10% to be achieved in about a week or 2 weeks. So my trade will be done depending on the chart. My stop losses will be also placed accordingly. If I'm entering a trade on a one day chart, my stop losses are always on the closing basis of the previous days or of the support. What is the closing level? Not the wick level, the closing level. Which is why there are a large number of times when Kamal and me are discussing stocks, we will look at the closing of that candle and not at the wick. But it gives us an indication that it has the capacity, the trader can take it in that expanded zone also. So the wick gives you an idea of how much the traders in the market are willing to play over. Clear?
Yep, got it. Thank you. This was good actually.
Absolutely. Welcome. Anybody else? Any questions? Kamal?
Yes, Vivek sir. One question which I have received, which is very much close to what Prem asked,
Yeah.
as when we do analysis, we see on the chart what is the support where we need to enter, and if the stock price goes below that support price, we need
Hmm.
to have stop loss below the support price.
Yes.
You mentioned one of your mentors suggesting keeping few percent down is one of the strategy. Do you also suggest that in case you want to rebuy that stock if its
Hmm.
price falls to the lower support from where it
Hmm.
is currently?
Hmm.
In that case, what should be the strategy for putting the stop loss? Would the same strategy apply?
No. No, it would not. Number one, what the gentleman is asking you and what you are suggesting is that if my stop loss gets hit, do I further buy to average or re-enter the stock? When a support has been violated,
Mhm.
when a support has been violated, that means the trend of that stock has changed. So now the next support will be much, much lower. So I would rather now sell the stock and let it come down rather than going in for a revenge trade of buying more to average. When a support has been violated, which we will see in the charts today, umpteen number of charts today will show you that. If a support has been violated, it only indicates that the weakness in the script or in the share has entered and it will go further lower. If it's a wick, lower wick or an upper wick which has gone and hit your stop loss, which has hit your stop loss, that means just that the trader there is really out to take away all these small game players. But that is a risk which you are taking. There is a high probability that it will hit your stop loss, reverse and climb back further. Very high probability. But that means you should pack your bag that you had identified the support levels correctly, but give yourself a small pinch of not doing a proper stop loss placement. So you will be able to then rectify, learn from your mistake and create a better stop loss position. But never ever going for a revenge trade that I will buy more or let me see how much more this loss can take place. Unless you really can bear a loss and smile away and learn from your lost trades. Lost trades are the best place to learn how to trade. Any trade in which you are losing money, learn to analyze it and understand why are you losing money in that trade. What went wrong in your analysis? That is the best way to learn. What went wrong in your analysis is the best way to learn how you can improve your trading. How can you improve your investments? Clear? I hope I answered him well.
Yes, sir. Thank you for that.
Welcome.
We have one question from Cliff.
I'll just briefly explain that to him again once again. Cliff, what we have done is, what I've explained to them is, when we are using a technical analysis and identifying a trade, we will always tell you why are you identifying the trade. And normally in my case, when I take a trade, I take the trade at the rock bottom of the place. I would like rather be patient and take a trade at the rock bottom with minimum stop losses possible, right? But if I'm placing a stop loss, now I'm placing a stop loss after looking at charts which the world is doing. Every trader is doing it. So a large number of times, the big traders who are also trading in the same place, they make the maximum money when your stop loss gets hit. They would make maximum money when your stop losses get hit. So there would be chances where wicks are generated, lower wicks are generated to eat all these stop losses kept near that support zone. So when I trade and I keep my stop loss, I identify the support zone, the lowermost cent value of the support zone, be it dollar and cents, and then I go a percentage lower or a dollar and a half lower. I always do that because that means that the person who is the operator will always hit till the support is identified for the majority. He will not bother about taking everybody out. He is bothered about taking most of the traders out. So he would hit the supports and then he will bounce back. Your stop loss will still be secured because you are lower than the support. That means I am increasing my risk appetite. Why? Because I am very sure that I will get my capital of about 3.5%. My risk appetite of 1 to 3 or 1:5 will be maintained. So when I'm trading on 1:5 risk reward ratio, my risk is actually 1.5 on the lower side, and my target, which is 5, instead of 5, I will keep it at 4.5 or 4.25. Why? I want to leave something on the table for another retailer who wants to come in at the top end of the market. So I'm leaving 0.75% of my target on the table as an incentive for him to take it away. I am still getting my about 4% return or risk reward of 1:4, which is good enough for me. I need not always look for 1:10, 1:5, 1:7. 1:4 is also good risk reward ratio. I could use this as a ratio or I could use percentage as a ratio. Now I always play on a combination of the two. If my targets are in the percentage ratio in the risk reward 1:3 or 1:4, it will go on that quantum. Otherwise, if my targets are far away, like my target on goals are pretty far away. I had taken one target on 4th of February. I liquidated some stock at 4th of February with a very handsome gain of almost 50%. But my balance target is at much higher levels. Though the prices have dipped, but I am not worried. My principle is out. Now I'm working on trailing stop losses. Now trailing stop losses is another way of safeguarding your profits. Profit earned is not only once. Whatever you have earned, whatever profits you have not yet accrued, which is notional profit in the system, that should also be secured by putting a trailing stop losses. Now I could be doing a system of doing last 1 week low as a trailing stop loss. I could do a system of doing last 2-day previous low as my stop loss, because even if it goes lower than the previous day's low, it will not go lower than the previous to previous day's low. So I use 2 days prior to the today's day, that's low as my stop loss. That's how we are working on it. Each one will work in a different manner. And as you keep trading, you will keep analyzing this and understanding how can you improve your stop loss placements. Right, Cliff? Hopefully that was satisfactory. Feel free to unmute yourself and speak. We are a group of friends, so we can always speak openly.
Okay, thanks much. Yes, that was much clearer.
Most welcome. Anybody else any questions?
Hello, Vivek sir. This is Vivek
Yes,
from
Vivek,
Calgary.
tell me.
I don't know if this was shown in the first. I just joined a little bit late. Can you show how to set stop losses on QuestTrade or Wealthsimple?
We have still not come how to place a stop loss on the trading platforms. I'm still talking about significance of stop losses for long-term trading innings. I'm still on that.
Yes.
So
Vivek, I have a question.
you are still very much on time.
Yes, Vivek will be covering that.
Hi Vivek, this is Avinash here, and
Yes,
I live in Halifax, and I've been following
Lovely.
your groups like since many days now.
Lovely.
So I have a question for you. Like I've seen on so many like WhatsApp groups and Facebook groups, and people are telling like let's buy inverse ETFs so to minimize your losses in the bearish market. So is it a good strategy to buy these ETFs just to minimize some of our losses?
It's a good strategy only if you know, if you are very nimble in your trading, you're quick.
Okay.
If you're quick, it can really boomerang on you.
Okay, so just like we put stop losses, can we just
Yes.
put like selling something like that?
Yes, you can. Yes, you can. That is what I would have done.
Right.
When we were talking about a stop loss being hit, and somebody says, "Let me go and buy more," I would do the reverse. I would say, "My stop loss has been hit. Thank you very much. Thank the market and now sell," because my stop loss was a support which has been breached. If a support has been breached, that means the share has become weak. It will fall further. So if it's going to fall further, please sell. Please sell immediately in loads and buy at a lower level. Now keep one thing in mind, when a bearish movement enters the market, it is very, very sharp and very strong. It's easier to fall, and the fall is always vertical and much more sharper as compared to climb. When you're climbing a stair, you will climb slowly and steadily. It takes time for you to climb. But a fall will be very sharp and very acute. And that is the reason why you have to be very nimble in trading when you're doing reverse selling or you are shorting a market. Because a bearish short in the market, it could last for only about 3 or 4 days. That is enough for a bear to take out the best of bulls. 4 days of good bearish movement can kill the bulls for a long duration. We've seen this happening umpteen number of times on every exchange in the world. Every exchange. No exchange can say we haven't seen a bear hit. When the bears hit you, they hit you really bad. I mean, if I can quote the ironsmith, when he hammers, he gives you a very strong hammer. That is the hammer of a bear. And a goldsmith will prod you with light beatings and take you up. So a bear is a very, very vicious movement and a very fast movement.
Thank you so much, Vivek.
Welcome, Avinash. Anybody else? Another minute and a half left.
One question. This is Shiva.
Yes, Shivanand.
Yeah. So it's a bearish trend, and we have reached the stop loss. Okay. Now we can see the slope of the movement, like it's going down. Okay, and at a certain stage, it gets stable. We see the Bollinger pattern is like a
Tipping and flattening. Yes.
yeah, it's very flat. Okay.
Yeah.
And it still fluctuates. Okay.
Yes.
So now the bull has like entered in, like for 3 or 2 days it's going up, but is it the right time to jump into the market or wait?
What you should do is, once a support has been breached, you look and identify the next support level. If this consolidation is happening at support level, that means now the bulls are entering back and will take it up further. But if the support is even lower, possibly there is a first of bulls happening over here. It will go further down and then take a strong support. Like Barrick, Kamal has also said it a number of times, even I said it. Barrick, your next strong support is at 22. Where are you today? You are at a much higher level, right?
Yep.
Barrick, you are today at 23.75. My next strong support is at 22.
Vivek sir, we have one question. Could you please explain in brief about trailing stop loss?
Trailing stop losses. All right, that's a good one. Can you name me a share which I can pick up? I don't want to pick up a share which I am seeing. It will not make sense.
Can we pick up TSLA?
I knew this will be coming.
Kamal, one quick query. I mean, the next session would be technical analysis, or it would be again stop loss?
It will be placing stop losses and then technical analysis. How do you place stop loss and then technical analysis? Because that placing of stop losses is very important. I don't mind even if I don't do technical analysis today, because stop loss placement is that important. All right. Now Tesla, I am watching a day chart. I will show you both the charts of TradingView on TradingView as well as on Yahoo. Reason why I put up trading view is because I can change my candlesticks to Hekenashi or to Renko, which I could not do it in Yahoo. Yahoo, I can only keep candlesticks. Now, look at this chart in candlesticks. It reversed from here, 23rd of February. Whereas in Tesla, if I convert this to Hekenashi, 23rd February was a green candle, and I still am coming down. That means Hekenashi gave me an indicator that I should be exiting my portfolio, my position in Tesla, when almost over here. 26 Jan, 27 Jan, and I get a dip. My Hekenashi has turned red. My Bollingers are also talking about it, but it goes up further. It gives me an opportunity to again exit over here at a height of 878, 880, 877. Height over here was 895. So the support is at 400 only. The next buy is at 400. The first minus support is at around 600, which you can check it out over here. This is the first minus support at 538 or 583. But the main support will come around 400. 389, 400. And that's exactly why, because it's gone below the 20-day, 50-day, touching and kissing 100-day, and 200-day is only at 500 and over here. This portion is talking about 200-day moving average, which is at 458 currently. So by the time it comes to 458, this will be at 400. So Tesla would be a sell on rise. If you have stocks, I would sell it on rise. If I compare this Tesla with a Hekenashi, it's already giving me a sell. Not yet talking about a buy. Now, convert this to a Renko chart. What is the day it's giving the sell on? 22nd of February. What is the day it gave a sell over here on 22nd of February? No, wait. Not 22nd February. 8th of Jan and 22nd of Feb. So on 22nd and 25th, it has covered 3 blocks of Renko. 3.5 blocks of Renko have already been covered. That means the fall is going to be there. Now, the Renko chart is also showing you a support at around 342 or 382, or at around this level, 383. If you remember this chart, see the low, 385, over here on top, you will see the lows, 385. That is exactly where we were looking at on the Tesla chart here. Clear? How I'm using various charts, various indicators, including my exponential moving averages to play on it. Now, you were talking about trailing stop losses. Somebody had talked about trailing stop losses, right? Now, a trailing stop loss, let's say I entered it somewhere at this price over here. On 30th of October, I entered at the high of the day, which was 407.60. So I entered at about $400. The low of the day is 379. I can always keep the previous day low as my stop loss, and I can start trading. Now, this was the high was 407. Let's say I entered at high is 406.98. The low was 380. Did 380 touch over here? It did not. So even if I entered at 380 or I entered at 400, I did not get my stop loss hit because that was my previous lowest low in the last so many days. Look at the lowest low it has been generated. Anybody remember the day it was? This was the day, 30th of October, 380. Did the low ever touch recently? So this is the last low that it had touched. I have entered at the highest point of the day at 407, or let's say 400. I entered at 400. I keep this as my trailing stop loss. That means my low for the day is 380. I will keep my stop loss of 380 and enter at 400. A $20 stop loss for a $400 share. Now, what is the target you expect to achieve? Let me hear this now from anybody. I have entered over here, right? This is the price you entered. Now, what is the target you expecting to achieve here now? On 2nd of November, I entered at 400 with 380 as my stop loss. What is the first target I can expect to achieve? At the height of this one, which is 465. Are you happy with the $65 profit with a $20 risk? 1:3. So that's your stop loss here. I am trailing my stop loss with the previous day's low for a target of 465. Now I can either look at 465 or I can look at a target of 500 or 502 and even 500. So $100 stop loss, $100 target with a $20 stop loss. Now let's assume my stop loss is 380. Next day I move up. I come to 427. 380 touch? No. The previous day's low is 392. Alright. Now either I keep maintaining 380 as a stop loss or I trail my stop loss with the low of the previous day, which is 392. I've entered at 400. My stop loss is now $8 less than my entry price. Next day I go up, I don't touch 392 at all. Right? Now the low here is 406. I can maintain my stop loss of 406. Now at 406 stop loss, I am on a $6 profit. My principal is secured. I am in a profit of $6. And this is just the third day. Right? So I have kept my stop loss at 406. It did not touch the next day. This day low is 417. Next day I keep a trailing stop of 417. It touches. No, it does not. Now stop loss is at 417. If stop loss is at 417 means I'm at $17 profit. Now the low over here was 424. The next day I keep a stop loss of 424, which still does not get hit. It's 424.28. Now my stop loss is 424. I'm on $24 profit on a $400 entry price. My stop loss now is 424.28. I go the next day, my 424.25 gets hit over here. So I have made a profit of $24.25 in 1, 2, 3, 4, and 5 days without battling an eyelid and without even thinking about it. So on a $400 investment, I make a profit of $24.25, which amounts to almost about 6% return in about 5 days by just trailing my stop losses. All I do is I work the whole day. In the evening, when I'm having my tea or a drink with my family, I just spend 10 minutes or less than few minutes in realizing what was the low of the previous day, putting my stop loss, and go about enjoying my life, working, dating, enjoying my family life, do what I want without looking at the markets. My stop loss is securing me. Now this was just one case. Pick up any date of your choice. Anybody has wants to discuss a date he entered a stock, any stock, you can see that here also. Like this is the lowest point of the day after a large number of days. Anybody entered a Tesla on 23rd of February, high at 713, right? With a low of 619. Now that's a $100 gap. I would normally not touch it. It's a $100 gap. But 619 entered at 713, 619 stop loss. 619 did not touch. The low is now 694. The next day, 694 gets hit, I get taken out. So it's a loss-making unit. My trading stop loss stopped me out from a bad trade, which was a wrong entry price anyway, but it stopped me out from a bad trade. You pick up any other share. Anybody has a share to discuss, we can do a trading stop loss for that. We are doing Tesla. You want to do Apple?
Yeah, Apple.
Apple. Where did you enter, Kamal?
I think 123.5. 123 or 123.5.
You entered at 123. When was that?
The fifth candle before from the last.
1, 2, 3, 4, 5. So you are now 123 means you are now in the loss.
Yes, somewhere that time.
Right? So now, all right. Now let's say Kamal's trade at 123 from this date. Or was it 23rd of February?
Yeah, I think this 123.
23rd?
Yeah.
Yeah, 23rd February. Now you ended at 123. The low was 118. Next day 118 touched, did not. Though my entry price is 123, what was his stop loss? His stop loss must have been somewhere around
121.
121 or 120.
Yeah,
Stop loss 120.
120.45 to be precise.
120.45. Great. Now 120.45 over here. No. 120.45 over here. No. 120.45 over here. No. His stop loss has still not been touched. Though it's a loss-making trade, but his stop loss has not been touched. Now look at the candle bounce. The green candle will come up. RSI is slightly curving. Look at this RSI over here. 29, 28, 34. At 28 and 29, its RSI is curved. Williams CCI was over here, 211. 211 over here. Currently CCI is at 142. It's already curved up. RSI Williams was at 61. 61. Where are you today? 85. There is a chance the RSI has weakened, it will bounce back, it may bounce back. Now, look at the other parameters. The upper Bollinger Band is tearing up. The mid Bollinger Band is still going down, the lower Bollinger Band is still curved down. It is below the 20-day, 50-day, 100-day EMA. It is turned weak. It is turned weak. Now, if I were Kamal, I would change my stop loss from either at 120, wherever he is kept at 120.25, to a stronger stop loss of 113. But that means he is taking a $10 hit. He is willing to take a $10 hit for a target of approximately about, for a target of approximately about at least 45.
Yes. That's it.
So I'm willing to take a $10 hit for a target of about $25. So 1:2.5 is my risk reward ratio. Now, Kamal is a seasoned trader. He can absorb the shock also. A $10 hit will not make a difference to him at all. But for somebody, it could make a major difference. Plus, he is a nimble trader. He can come in and go out of a trade very fast. He will come in and go out of a trade very fast. By the time he has entered the trade and exited, you and I will only be thinking, should I enter the trade or not? He is that experienced a trader. Right? He has seen a very strong support over here, which is why he was looking to buy it around this price. Consolidation in November last week and 10 days of December. He's seen a strong consolidation over here. Plus the Bollinger Band coming out, going in, coming out, going in. Now, probably he's expecting this bounce to go up like this. He's expecting this bounce to happen like this. This is a fall like this, so this will be a climb like this. So possibly around end of March, he will be looking at a figure of about 145. Kamal, is my deadline all right?
Yes, sir.
One question
Sure.
here. So you are saying that it might bounce back. Why not the other way? I mean, if we see the 20 days EMA and 50
Yes.
days EMA, they are very close. We might be in a death cross. Might be. I'm not
Dead cross
sure.
has already, the dead cross can happen anytime now. The dead
Yeah.
cross can happen anytime now because the EMA crossover can happen. And if that happens, Kamal will exit at the dead cross itself. He will not even wait for it to hit the stop loss. Even if he lowers the stop loss to 113, if dead cross happens tomorrow at 117, I'm sure Kamal will hit this trade immediately. Because now you are talking about EMA crossovers and a dead crossover, golden crossover happening. That is an additional advanced technical information getting on. So if that happens, I'm sure Kamal will not like to wait. He is not married to Apple. Definitely not married to Apple.
No.
So if this crossover happens, if the 20 EMA crosses and goes below the 50 EMA, Kamal will not hold on to his position at all. Which is why I even told you at the beginning of analysis of Apple, it has turned weak because it has already crossed 20, 50 and 100. It is now below its 100 moving average. It's now closer and approaching 200 moving average. So it is turning bearish. So it's turning bearish. Possibly Yash, if he's trading Apple, he will sell his futures and options of Apple now. Or Yash would have sold his Apple futures somewhere over here, where the 20-day EMA, where the price has crossed below the 20-day EMA, he will sell his futures over here and options of Apple. Even if it's a swing trade, he would have done that over here. Now look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. 2 weeks of trading. And where has it fallen from? 135 to almost 120. $15 dip on a $135 sale. What more can you ask for? Almost 12% returns. Almost 12% returns. Right? There I've used EMA movement with my price. But as we were talking about, let's say Apple and take a trailing stop loss. 1 second. Kamal, when you enter into Apple earlier, any of the entries?
Yeah, before that I had entered at around 127.
What date?
If you scroll,
If you have a trade log with you, you can just refer and just give me a date. Any date of your choice. Or if anybody else has entered a winning trade in the previous any script, we can study that script also. Otherwise, 1 second, let's take this trade over here. This trade over here on 2nd of November. Right? It touches lower Bollinger Band, your CCI, Williams are and RSI are almost getting ready to move up and out. RSI 40, CCI minus 180, Williams are minus 90. Do I buy here? Possibly. Otherwise, I buy over here. I buy at 110. I buy at 110. The low was 108.75. So I buy at 110, keep my low stop loss of 108.75 or 108 also. Next day, 108 not touched. The low is now 112. I keep my stop loss at 112. Not touched. The low is now 116.85. Right? I keep that as a low. I get stocked out here. So one, two, and third day, I am stocked out at 116.87. What was my entry price? 110. 116.87. I have made $6.87 on a investment of 110. In how many days? 1, 2, and 3. Thank you very much. 6.87 on 110 gives me a 6.25% profit in just 3 days. I have trailed my stop loss. I have defended my profits and not allowed my profits to go. How much time did I spend in putting a stop loss? 10 minutes only, or 5 minutes only. So when you had come home and your family was preparing your tea, you have used that time to place your stop loss and secure your profits. Now, had I not kept my profit at 116 over here, had I kept this as my stop loss, which is low 112, this day it did not hit 112, it did not hit 112, it did not hit 112, it did not hit. Where does it go and hit? It's 112, it does not even hit here also. It hits 112.60, whereas I'm looking at 112.35. Even on this day, 112.60, my stop loss is still not hit. 112.35 is still not hit. And I look at my trailing stop loss going up way. So if I keep maintaining my stop loss, I can keep booking out whenever I make a decent profit. It could take 1 week, it could take 2 weeks, it could take 3 days. That is the advantage of a trailing stop loss. I'm sorry, I've taken almost 1.5 session only in trailing stop losses. But I think it's important. It's important because then you would tend to understand that better. Any questions, guys? Kamal, I'm sorry, I'm eating into your time.
No, sir.
Kamal, you want to take up how to play stop loss, because then this session will get over with that, I think. Because you can.
Yeah. So Vivek sir has
Yes.
spoken about the importance of putting stop losses, and I'll share on how to put stop loss on different platforms. Since many of our members are beginners and most of them, I assume, would be having Wealthsimple Trade. So I would start with Wealthsimple Trade, then show on QuestTrade and Interactive Broker. For Wealthsimple Trade, whenever you are on sell page, by default you would be seeing this page wherein, let's say, we are trying to sell an Apple stock. So by default you would see market sell. You need to tap here, and once you tap you would see these 3 options. So usually for buying or selling, we recommend to use limit orders, which limit sell helps to set limit sell. But there is also one additional type called stop limit sell. So this is the option that you need to choose for setting stop losses on your stocks, which is already there on your Wealthsimple portfolio. So let's take an example of an Apple stock, which we discussed some time back. Vivek sir was showing analysis of that. So if you have a stock in your portfolio already, you would be able to put stop loss on that stock. Its current price, it's showing as 121.26. If you want to set a stop loss at 120.45, you would be setting first the trigger point where the stop loss order should be activated, and that's what is the first option. At what price do you want the stop loss to be set. So this is not the price at which order will execute. This is the price at which your stop loss order will become active or it will be submitted. So let's say we set it at 120.50. Then on the next screen, you will be getting option to set at what price you want the Apple stock to be sold out. And that is your actual stop price. So let's say we wanted to sell it out at 120.45. So here you set the price, and in the next screen, you, depending on how many quantity you have, you set the quantity. Let's say we want to sell 2, and on the last page,
Kamal, just wait. On the second screen where you have mentioned the number of shares as 2, the app is giving you the share portfolio holding above which Kamal is already masked out, where the question mark is put up. That is the number of shares available to you, as well as available shares are listed over here. How many shares do you want to sell at the stop loss? You will feed in over here. You can either feed the full quantity, or you can feed in quantity which is less. You can never feed in a higher quantity than that is available to you.
absolutely correct. Thanks, sir, for pointing out that. So based on number of stocks that are already on your portfolio, you could set either equal to that or lower than the number of stocks that you already have in your portfolio. Then on the last screen, you see the confirmation page. And a very important thing here for those who are not monitoring the stock market every day is to enable this tab, which is, it will keep your order active for 90 days. And once you hit confirm, your stop loss order is set with a trigger of 120.50, which will execute at 120.45 if the stock price drops further to 45, and your stop your order will execute like a limit order. Any questions on setting stop loss on Wealthsimple Trade?
Hi, Kamal. Just a question.
Yeah, sure.
Shouldn't the stop loss be lower than the limit sell?
The lowest price at which you want the order to execute should be lower than the stop price, which is the trigger price at which your order is submitted.
So stop loss means the minimum on which I can sell my script, right? That
Yes.
beyond that, I don't have the resilience to go below that. I won't be able to have that loss in my account, which is why I will say that, hey, just go and if the price goes at 120.50, just sell it. But according to my understanding, and the limit sell would be kind of, a profit where I'm looking at that, hey, if I bought it in 125, I should put it as a 126 so that I get $1 profit in it. But in case of the stop loss, I can't go beyond 120.50. If it is touches 120.50, just sell it out. Isn't it like that?
So usually you use limit orders for selling at any price that you wish. Usually
Right.
you use to sell your stock at profit using limit sell,
That's correct.
and
So that
stop.
should be higher than the stop loss, isn't it?
Yes, of course.
Yes,
Yes, of course.
yes,
What happens is when you are placing a limit sell order, you are
Yeah.
placing a limit sell order after you have bought a share where you want to liquidate your profits at a
Hmm.
price. So you are selling, you are keeping a higher sell limit order.
Correct.
But when you are placing a stop loss order, you are placing a stop loss order in the eventuality of the markets turning against you and you going into a loss making trade. this stop limit sell will prevent your capital from deteriorating and losing out the capital. So
Right.
you
So the
stop limit sell. That's a stop limit sell.
so
One,
isn't it the stop loss?
yeah, that's a stop limit sell is like a stop loss. Now,
Right.
what is at this price of 120.50, the system will get triggered that this price has been traded. Now, the minute the system gets triggered that this price has been traded, the system realizes Kamal had requested me to place a sell order at 120.45 if this price gets traded. So at 120.550, Kamal says it's time for me to cover my losses. So please cover my loss. The lowest price would be 120.45. He could also liquidate at 120.50. In case if there is a buyer at 120.50, this price will get liquidated at 120.50 also. Am I right, Kamal?
Yes, that's correct. And
Price will do that.
yeah, so usually for putting stop losses, it's recommended to keep a trigger point little higher, because if the volatility is high, the trigger point when it is hit, by the time if the volume is high, your limit price may drop further and your stop loss might not get triggered. In it happens in very rare cases. That's why it's recommended to have your stop loss price slightly lower than your trigger price. And though it's recommended for stocks which are on US market, and that's what Wealthsimple Trade app supports. If you are trying to put stop loss for Canadian market stocks, Wealthsimple Trade, it shows a warning saying that your both these prices of setting the stop price and lowest price both needs to be same. So when you are trying to put a stop loss of any of the stocks which are on TSX or TSXV, you would be setting same price for these two. While setting the stop loss on US market stocks, it's recommended to set this price as slightly higher than your actual price at which you want the stock to be sold out.
Because very often it so happens that there is a major seller in the market who is just selling you off. So in case if your stock price, the trigger price is not like this, placed this way, it could just jump over, right from 120.60, he could go straight down to 119 also, or 120. So your entire stop limit order gets nullified and you are now in a dead loss, which is why that trigger price is important.
Okay. Thank you.
Welcome.
Hello, this is Rajiv here. I have a question here.
Mm-hmm.
Yeah, Rajiv.
As per is my understanding correct that when, let's say, taking this example, a trigger of 120.50, is that when your order gets registered on the exchange and then at 120.45 it actually executes? Is that how it is?
That is normally the way it is done. That is normally the way it is done.
Okay.
That at minute that the last traded price is at 120.50, the exchange realizes or the system realizes that some client has put a limit sell order or a stop loss order at 120.45. So immediately that order is sent to the exchange.
Got it. Okay. Yeah. Okay.
So if at that point, if the price is still at 120.50, it will wait till this order gets filled in.
Okay. I see.
You are coming in at 120.45, which is the best selling at that very minute.
Right. True.
Previous selling was at 120.50. You are coming in at 120.45. So that is the best sell at that very time, at that very moment. So possibly there will be a buyer. If there is a buyer at 120.50, then your trade will happen at 120.50 and not 120.45.
I see. Okay. Thanks, Vivek, sir. That clarified my question.
Kamal, just a suggestion. If this is a PPT, share this PPT on the group also for those who are not attending today's lecture. It should be indicative. It should be helpful to them.
Sure, I'll share it in our groups.
Just put it as a PPT. If somebody wants, he can use it.
Definitely, sir. That's a very
Yeah.
helpful
It's a
suggestion.
reminder for all of us sitting in the lecture today also.
Right, right. Sure. After the session, I'll share this PPT.
Yeah, do that.
Right. So this PPT has screenshots for setting the stop loss on Wealthsimple Trade. For setting on QUESTRADE and Interactive Broker, I'll be showing on the platform directly.
Lovely.
Okay. So talking about how to set stop loss on QUESTRADE. So those who are using QUESTRADE, this is their desktop IQ Edge application. I'll be showing here so that it's more intuitive. So we had seen how to set stop loss on Wealthsimple Trade, taking Apple as an example. So I'll continue with Apple. Here you could set from order entry. The order entry is here. If you select order entry, then you will get small window like this. Apart from that, you could select level 1, and level 1 would give a small window like this. So both in level 1, you can see here it gives you option to set the orders, and order entry just has a window where you could set your orders. So most of you who would have been using would be familiar with this. The point which is relevant for our discussion is setting stop loss. So under order type, if you select the drop down list, you will see multiple options, and among those there's one called stop. So this would be for setting order type stop loss, but it would be setting your stop loss on market price. So here you set the price at which your order you want to the Apple, for example, Apple stock you would like to sell. As in our previous case, it would be 120.45. But usually market prices are volatile, so we recommend using limit orders both for buying as also for stop orders. So the better option which I usually recommend is to choose stop limit. And in this here, the first option is for setting the stop loss trigger price, which as we discussed previously, for Apple, as I had said, on Wealthsimple Trade, 120.50 would be the trigger price, and this limit price would be the price at which Apple I would like to be sold out if the price drops. So that would be 0.45. Now if I am day trading, then you would select duration as day, but since mostly I do swing trades or hold medium to long positions, so I usually go for GTD, which gives me the option to choose the date when up to which I want my order to be active. So let's say I would like this order to be active up to end of March. These are for setting the routes, which depends on if you are choosing GTD, you could keep it auto and just select sell. This is how we usually set stop loss orders on a stock which you are already holding. If I would have been holding, I would not have got that pop-up because I'm not having Apple in this portfolio. That's why it gave that warning message. Apart from that, as Vivek sir explained about trailing stop loss, which is even better for those who are not having active time. So trailing stop loss, it gives you flexibility to set either offset. In case of trailing stop loss, you set a trailing price instead of the actual stop price or the trigger price. So let's say here your current price is 121.26. So I would say trailing as 121, and offset, I would like to keep an offset of 50 cents. Vivek sir mentioned about keeping 1%. It depends on how much you would like your stop loss limit to be lower than your support price. So usually it depends on stock price. You could decide what should be the suitable offset. For our case, it would be 5 because I had kept like 120.45. So the offset here, in which case would be 0.55 away from 121. Now, what this trailing stop loss would do is, as Vivek sir already explained, that as the stock price moves, this trailing stop loss offset would be 0.55 away from the actual stock price or the stock market price. So it helps when the stock goes up, and after reaching let's say resistance, it falls down, and you would like to take the benefit of the stock which has moved up and then has started correcting, and you want to take out your profit. So trailing stop loss helps in that way, that you don't have to manually come to the system to change your stop loss.
This can be used better also this way. If I am actually trailing it to a percentage value of my last traded price. Now, in this case, Kamal, the trailing price is 120, 126, right?
Yes. Eh,
121, 126,
yes.
right? And I'm offsetting it by 0.55.
Yeah.
I could actually offset it by only 1.21. That is, I'm offsetting it by 1% dip. That means I am going to be encashing my sale with just 1% variance from the peak of the rate. So this trailing would be an even more effective trailing than what I will be doing it. I was doing a trailing on an Indian stock market where I'm not getting all these benefits. But if I'm getting the same benefit in the US stock market or in Canadian market or in IBR, I could be trailing it with just a $1.21 trade at all. Whereas in Apple, if you remember, we were trailing with a difference of almost about $3 or $4. But here I'm trailing with just the value. It's more like a Renko trade. Minute my trade comes 1% below the highest peak, please sell me out. But this would actually also hamper my growth in terms of being stocked out very early if the stock is very, very volatile. Sure, that's interesting. It's something new I learned today.
Right. So now moving on from QuestTrade to Interactive Broker, there are similar options with some more additional order types. So usually you would be using limit type to buy at a specific price or sell at a specific price. Along with that, there is STP limit, which is nothing but your stop loss limit. So here you put your stop loss trigger price. So in our case, it would be 121.50. And then this is your actual price at which you want your stock to be sold out. So this is the actual stop price at which my order should execute. And this, it has one additional option wherein it says if you would like to fill or trigger outside RTH here is regular trading hours. So if you select this option, your order would be submitted if the Apple stock price reaches 121.50 even outside the market trading hours of 9:30 a.m. to 4 p.m., which on Interactive Broker it supports from 4 a.m. to 8 p.m., which means if the stock price of Apple reaches 121.50 either in pre-market from 4 a.m. to 9:30 or during the market hours from 9:30 a.m. to 4 p.m. or from 4 p.m. to 8 p.m. With this selection, your order will be submitted at any point when the stock price reaches this price, and if it reaches 121.45, your stop limit order would execute. Now, along with
Hi,
stop,
Kamal. Just a
yeah,
quick question. This outside regular trading hours, it is applicable for options as well?
options trading happens only during market hours, so this would not be applicable for options
Okay,
trading.
thanks.
Uh, Similar to stop limit order, we have trailing limit order. Here, you could again put the, let's say, 21 point, let's see, one. It would be rather make sense to have 122, stop price of 120. 121.50. And in this case, this, if you see here, like Vivek sir was mentioning, the advantage here is it gives you additional option to select amount or percentage for setting trailing.
For setting offsets.
Yes, that's right. For setting the offset, you could either set the offset in amount or you could set it in percentage. So I believe Vivek sir, you would be using this percentage for setting.
I would use a percentage definitely.
Right. So you could use either percentage or you could put an amount. So this is like an offset amount at which
Wow.
your stop limit order should execute from the stop trigger price.
Kamal, this is IBK or this is Quest?
This is IBKR, Interactive Broker.
IBKR,
Yeah.
all right.
Yeah.
Yeah.
So the Interactive Broker gives option to choose
Much more benefits here.
Yeah. Right.
It also permits you to do currency trading, right?
Yes, it has currency trading.
And index.
That's right. It has currency trading, futures trading.
Yeah. That is going to be my target next.
So hi Kamal, a question. This is Nathar. So how is your limit price higher than a stop? For a buy order or is it for a sell order?
So this limit price is your trigger price. This stop price is the price at which I want my stock to be sold out, and this offset is this offset would remain the same if this stock price moves. This offset would go along with the stock price movement. If the stock goes up, this offset would remain the same, but my actual stop execution price would change based on the offset. So the reason why here limit price is higher is because this is the trigger price. If I talk in terms of what I was explaining for Wealthsimple Trade, so the first price which we set, so this is that price where you want your order to be registered at the exchange or at the platform. Okay. Now, apart from these two order types, if you are buying a stock, this interactive broker also gives an additional feature which helps you to put a stop loss while you are trying to buy a stock. On Wealthsimple Trade, unless and until you have a stock in your portfolio, you won't be able to put a limit sell or stop limit order. Whereas on interactive broker, it gives you the feature that when you are trying to buy a stock, along with the buying price, you could also attach profit taker as well as stop loss order types on the same order. How it works is, I'll just talk about profit taker as well, and stop loss is relevant to our discussion now. Let's suppose you are trying to buy Apple stock, 10 stock at just for the sake of discussion at $22, and I would like my order to be active even outside RTS, so I select this. Now if I attach this profit taker, this profit taker is like your limit sell order, the price at which you would like your stock to be sold out so that you take the profit. So if I have target of Apple to sell at 145, you could, while you're buying itself, you could attach profit taker with, it would be of type limit. And again, this one also you could select to fill outside RTH. Along with the profit taker, if you select stop loss, so this is your stop loss order. On the same order, once your stock is bought, then this loss or would be activated once it reaches the stop price. So let's say for our discussion, we had kept 121.50. So um, 121.45 would be the,
5.
yeah, would be the price at which you want your shares to be sold out. If the stock price, instead of going up, it goes down. So on the same order, while you are buying, you could set your stop loss as well. This is an added advantage of using IBKR, that even though you have not bought a stock which is not in your portfolio, while you are buying itself, you could set your target price as well as your stop loss on the same order. So just with this, it would actually create 3 orders. I'd intentionally close the orders window. So basically, with that, you will see 3 orders showing. First is the limit order for buying. Second is the profit taker, and third is your stop loss. Any questions here?
Hi Kamal, this is Suyash from Vancouver. Yeah, this is a great feature, man. Like I didn't know this. This would like definitely save us time, right, to log back to say, put orders. So this is good. My question is little bit off topic. Like if you can go back to QuestTrade, like I'm using QuestTrade, but that interface which you have shown, that was like pretty new to me. Like that I don't know, because what I get for my desktop is just like normal interface. So do I need to like download this, or how do I get that?
Yeah, so on the QuestTrade website, if you go there, they mention about 3 different platforms. One is this desktop application, which is called QuestTrade IQ Edge. They have their web application. Maybe you would be using either web application, or the third one is mobile application. So you would either be using mobile application when you are not having, when you are not using on the system. So this desktop application has a lot more features, which not only just for setting the orders, you could see the entire market, do analysis. You could go through their news. You can do analysis over here instead of going to TradingView or going to Yahoo Finance for doing analysis how the stock is moving. You could do the analysis on the platform itself. So this QuestTrade platform is feature rich to use it for additional analysis as well. Like this gives you a quick snapshot of how the market is. Let's say market opens at 9:30, and about 15 minutes later you want to understand whether the market is up or down. You can see by going through different exchanges.
This is called the heat map.
Yeah, heat map. So
and this is a desktop version, so I just need to, when I sign in, I have to select desktop version, right?
This is QuestTrade IQ Edge.
On QuestTrade website, if I think on the under the platforms,
okay,
somewhere you would be able to find. You should be able to once you log in, then I think you would be able to get the platform as well. A link from where you could download. QuestTrade IQH.
Okay, no, I'll go through it. Perfect, thanks. But I think IBK is much better than QuestTrade, right? I'm planning to switch actually to that.
Yeah.
What are your opinions?
So in terms of my personal experience, what I have used IBKR for over 2 months and QuestTrade for over 6 months. In terms of usage as such, both platforms you might find similar, whereas when it comes to commission, when you buy and sell, you would see drastic difference in commission, more especially when you are doing more number of trades per week. You would see drastic difference in the commission that you pay on QuestTrade and that you pay on Interactive Broker. That's one of the reason why I am getting more keen on using Interactive Broker, and I'm also thinking of moving my assets from QuestTrade to Interactive Broker.
All these facilities are not available on Wealthsimple. Can we do it through Wealthsimple because they don't have any commission thing?
Wealthsimple, as its name is simple, and it's a very good platform for beginners and for trading Canadian stocks, which are commission free. But in order to have these kind of additional features, it might take some time for Wealthsimple to have it, and that's one of the reason why Wealthsimple is free and these platforms are charging commission, because it needs infrastructure in development, I can say. So that's why Wealthsimple currently supports basic order types which are good enough for beginner, or which are good enough for people who are not trading day in and day out.
Yeah, got it.
Right. Now, before we move to QuestTrade, this is what I wanted to show. We had put a Apple buy order, which is at 122. Along with that, there are these two attached to the same order. If under the key, you will see that this is the main order and it sets 0.1 and 0.2. So this profit taker is set at 145 and the stop loss is set at 121.45. So this saves a lot of time in putting your orders, because you just set all three at once, instead of doing once your buy order is executed, then you come and set your sell order, or if stock price is going down, then you come and put the stop loss. So it is very convenient in setting all three orders, and you can set this from Interactive Broker. This TWS platform, what they call is this desktop application, Traders Workstation. You could do it from their web application as also from their mobile application as well.
Kamal, just one question.
Yep.
When you have a profit taker order form, they can only put one order, or you can put multiple profit taker orders? If I've taken Apple, I've taken about 70 shares. Can I sell 10 at 145, 10 at 160, 10 at 175? Can I do that kind of order placements?
I think we have option for setting only one.
That's not possible, I think. Yeah.
Because the quantity here remains the same.
Locked, yeah.
Yeah, because the quantity here is the same. That's why I think setting different quantity.
It should be there.
Means we need to manually set separately, but on the same order.
I can buy it at 250 quantity, but I want to sell it off in a staggered manner.
I don't see an option here to customize the quantity. What I see is maybe we can explore, and if someone finds that would be beneficial for everyone. What I have noticed is, because the quantity gets locked here, the quantity which you bought, the quantity is not configurable here.
And which is that new tab, one cancel the another?
Which one? This one?
One cancel another. Lower down. Yeah, this one. What is this talking about?
Okay, add order.
No, do this. Sell contract, sell this. I do it now.
Yeah, I think then maybe
Quantity sell.
I don't know what is.
So it is kind of what I have experienced. It is
Quant-
same like profit taker and stop loss, but it is one cancels the other. So if one stop loss, for instance, or you want to sell it little profit, for profit taker, if you have 250 shares, 100 you sell it, then if you have put another 150, that will all cancel. So just one order executes. This is how it is.
Coming in. That's. Can you just repeat what you just said?
So if you have like if you bought 250 shares,
Yes.
and you place this, one cancels other. So if the price is short,
Right.
you put one order for 100 shares, and then you put one more for, let's say, 75 and 75. So if any
All
of
right.
these order prices trigger, that will execute, and rest two will cancel.
Okay, so do you mean that if we?
So you can have, for instance, you can avoid selling all the shares, like Vivek sir is saying, like for 250 shares, all the shares you don't want to sell it, you just want to take some profit out of it. So you
Yes.
just pay 100 at 145, and then you can set another 75 shares if it is 140, let's say the price,
Okay.
like that. But if 140 gets triggered, then that 145, the 100 quantity will get cancelled. So only one can work. That's it. This is how it is.
Oh, okay.
All right. All right.
Yeah.
So
So it is good, I think, for scalping. Like when your price target is really good, 145, let's say, where you want to sell all. But if it goes close but didn't touch 145, maybe 142, then you still want to max out something, right? Like cash out. So maybe
Right.
75 or 100 quantity would work. So this is how it goes. What I understood on the
So
video.
that means it's good for scalping.
Yeah, it's basically not missing out that up move a little bit, whether it touched the price target or not, but still cashing out somehow.
So jobbing and scalping, this would be
Yeah.
working. Okay. So basically, quantum traders.
Yeah,
But still looks to be a good feature. Like
Yeah. That's. I remember. I read it, so I said I must inquire about it because it's a very important tool for big traders.
yeah. So I haven't tried.
One second. There is another on-fill reduce other orders. This can also be clicked on. Right? See, you can click this. That means you can actually do staggered selling. This will require research, Kamal, but if it works out, it works out very well. When we tell people take your profits home or secure your principles, you do learn a staggered selling basis over here.
Yeah.
Yeah, looks like, yeah, interesting. Yes.
That's right. Quickly change little topic just and try to finish it in next 5 minutes or so. So I was also asked about having screeners on interactive broker. So we on interactive broker, it by default has many screeners. This comes as default. You can see market movers and last price, change, percentage price. I like to keep these three. And so you click on edit scanner, and edit scanner, you select product, because I mostly trade in stocks. If someone is interested in ETFs, you could select ETFs as well. This scanner I have put only for US stocks. So region I have selected as US, and in US there are many exchanges. So usually for US, for this particular scanner, all the exchanges in US region I have selected. Now after selecting that, you can choose which are the fields and which filters you would like to have. So last price, change, percentage, and volume, these are the three which I look, but you could easily add from the add fields. There are n number of options, n number of fields which are available and configurable. You could just choose based on your requirement, and it gets added. This gives a snapshot at any point of time during the market hours. You want to see how or which are the stocks which are uh, quite up or which are quite down. So this scanner helps. Along with this, I have few custom scanners for penny plus is like stocks which are above $1. I kind of look for stocks which from $1 to 10 or $20, whatever range you usually would like to trade. You could create your own custom scanners. So this scanner I kept for stocks which are above $1. Similarly, this scanner for stocks which are under $1 from 0.20 to uh, 0.20 to $1, and where I usually specify that is here under fields and filter. When you select last, you can select this filter, and in filter you can specify what price range of the stocks you would like to see in your scanner. You could add the filters either on price range or percentage range. So since this scanner I have kept for stocks which are under dollar uh, or up to $1, I have kept range of 0.2, which is like 20 cents to $1 stocks appear in this scanner. Up and one another custom scanner which I have had is separately for the Canadian stocks. So the stocks which are on TSX and TSXV.
Kamal, I have a question, Rajiv here again.
Yeah.
I've been using the web version of both Interactive Broker and the QuestTrade. Do you think the desktop version is much more stable in terms of not timing out during the day? Is that what you have found out, or is it almost the same? I definitely know it offers way more features, but if I use the web version, it times out after a while. So do you have the same issue on the desktop one as well?
Yeah, exactly. That's what was my experience and problem with using the web applications of both the platforms, QuestTrade as well as Interactive Broker, because we had to log in again and again.
Right.
And on using their desktop applications, you don't have to log in again and again unless you log in once on desktop application and then access it from web or mobile application, then it signs out, in which
Got
case
it.
you need to sign in again. Otherwise, if you're just using desktop application, you don't have to sign in and again, which helps if you are doing some other work and then coming back,
Exactly.
right? So
Yes.
if you are using web application, it signs out, then you need to sign it again. If you have
Correct.
two-factor authentication enabled, it sends OTP, you need to check that. So I'm avoiding those hassles by preferring to use desktop application on my personal laptop.
Got it. And the screeners on both of them are showing data in real time, right? It's not delayed.
That's a very good question. It's delayed, unfortunately, unless you subscribe for market data, which is paid. Yeah, I
I see.
haven't
Okay.
subscribed for market data on both the platforms, especially on Interactive Broker. I might consider to subscribe sometime later, but as of now, I haven't subscribed. So the prices here, which it shows as delayed.
Mhm.
When you look at your account, the account shows prices delayed, but the calculation is real time. And in
Yes.
the screeners, the prices are delayed. That's
I
why
see.
um, if you want to see real time price, Yahoo Finance or
Trading view.
Trading View for US stocks is preferable. You can do analysis on the real time price over there.
Excellent.
Yeah, for Canadian stocks, Yahoo Finance has the real time price, which Vivek sir had shown already the platform.
Yeah, yeah. Absolutely. Okay. Thank you.